it didn't gain any close traction. So how do you think how the whole landscape, ETF landscape, changed when Gary approved ETF in the US?
Yeah, so in all the years that I've been working in the ETF industry, there was never so much sort of expectation and hype around product launches as there was for the Bitcoin, the US Bitcoin ETFs. And that built and built and built through the regulatory process. And then, when the likes of BlackRock, they are the whale, and people shouldn't just talk about them, there's plenty of others as well, but when they came in, it really gave a legitimacy to it. And I think the way that the SEC managed the process, where they tried to bring everybody together, and it sort of created this, gave itself this huge life, right, and exposure. And it also created a race to the bottom even before they were launched in terms of fees. And with them all coming at one point, and the excitement around that, and then the subsequent AUM that they've gathered, so over 12 billion within a short space of time, the quickest ever growth of an ETF that's being launched. It just shows that there was so much pent-up demand. I speak to some of the issuers in the US, and it's pretty much all retail. So it's all pretty much advised retail platforms, and even plenty of platforms out there still not giving access to these products. So it just shows the huge potential that's still out there. I think that the rate of take-up has come down a bit, so the growth curve is flattening, but it's just got so much more potential for growth in these products. And what it does do, the knock-on effect for other markets and other regulators is the legitimacy angle. So yes, there's products in Europe, there's products in Canada, but there's so many regulators now that will have to soften their approach. We've seen that a little bit in the UK, but it's just this knock-on process. It takes time. Regulators take a very long time to make decisions. Institutional investors take time to make decisions, to do the due diligence, to the assessments. So the process is a long one, but a very, very positive one.
Thank you. Guys, have something to add here? I guess, yeah.
I spoke with Matt Hogan, CIO for Bitwise, on my podcast, and he reminded me the first time was 2013 when Rico's brother tried to file in. So, like you said, a lot has happened in between. I think I was seeing yesterday Hong Kong now has approved the ETF in Asia, which means all the Chinese market can jump into it. Like you said so well, I think it's super early days. It was inevitable, but it took 11 years. But it's nothing but excitement, to be honest. I don't think we've seen anything yet. It's just the beginning, right?
Yeah, it's incredible that this particular ETF, the US for the US market, has done such a huge run-up for Bitcoin because of all the money that's there in the United States. Because ETFs have existed in other countries beforehand, and it was only in the American market that we saw this massive move in the price action. So the ETF is clearly buying up Bitcoin and so forth. But keep in mind, right? Our whole financial system is a scam because some people can print money and make everybody else work for it. So they're obviously going to manage the price of Bitcoin so that it doesn't rise too quickly. So and they can do that, right? Because the people who buy that ETF, they can only receive cash. They can't receive Bitcoin. So they will be using those Bitcoins that they've purchased to help manage the price. And they can do that by leasing out the Bitcoins to themselves and sell Bitcoin. It doesn't matter if they get it wrong. They just print more money and give you the cash. That's it.
Do you mean that the ETFs can print more money? What do you mean by that?
If you want that, okay, so do you know what happened in 2008? But the banks went under, and because they ran out of money, because the gamblers, they made wrong bets. And so once they ran out of money, they just printed more money, and here you go. And so they'll do that again.
Well, banks can do that, but but ETF fund structures can't do that. The regulation around fund structures don't allow that. I mean, banks obviously use their own capital. They're linked into the central bank networks where this creation happens. But fund structures are very highly regulated. There's usually not much you can do with it. The asset that you've got, sometimes you can lend, but not in a Bitcoin ETF that have been approved. You can't do that.
Okay, so the person who's providing the ETF is not the holder of the crypto. It's a third party. And I haven't read the prospectus of the ETF for Bitcoin, but I did read the prospectus for gold. And it says that if the custodian doesn't have the gold, that's not their fault. It's your fault. You have to sue them. You have to deal with that. So, and what happens is you're like, okay, well, I'll sue them and you'll get dollars. Yeah, you're not going to get gold. You'll get dollars. That's it. And where does dollars come from? The Federal Reserve. And how do they make that?
Printing.
Supply. That's it. So you'll get dollars. No problem. You'll get dollars for your retirement, right? What's the Greenspan said? We can guarantee the retirement for everyone, but we can't guarantee the value.
Yeah, thank you. Interesting point. Okay, how do you think, will we see any big changes in ETF landscape, and will people be that much excited about launching in ETFs for other assets like BTC?
Do you mean in the US
sure,
or just globally? So I think obviously in the US the next focus is Ethereum ETFs. I think the next approval timeframe for those applications is in May. The expectation is that they won't be approved in May. There's a question around, I think some of the applications have got staking and some don't. Staking, the ETH adds a risk element in terms of when there's redemptions out of the ETFs, will they be settled on time because of the protocol delivering back, and what can you do in terms of making sure that there's liquidity when people get out, and this is what regulators look at, right? I think regulators are looking at particularly redemption processes, i.e. people getting their money back. So I think it'll take quite a bit longer, and then US-wise, after that, it becomes much harder to see that there'll be ETFs approved on other coins, just because of statements that have been made around whether they're securities or not. Now, an ETF itself is a security, so if you've got a security in it, it shouldn't be a problem, right? But and we're going to have change at the SEC as well. That will have an impact on things. And then in other markets, in Europe, there's quite a lot of different product, less so elsewhere. We're going to see more and more single coin, multi-coin, thematic sorts of products. Index providers have been working flat out to get their suite of products ready, so that when the product providers can do it, there's a lot of infrastructure already there. What's holding things back is the regulators.
Yeah, super well said. I was about to say BlackRock is launching tokenizing a real asset product, right, which is based on Ethereum. Hello, shocker. So like you said super well, I'm not expecting anything in May, even though it could be a top signal, like you said, one Martin Davinci maybe, it could sit on top of the market for Ethereum to get the green kind of light, but like you said super well, I agree, I'm not expecting anything. In fact, the percentage of people from Bloomberg analyzing the percentage started like 70%, blah, 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 and now it's like 20 something. So themselves looking at the data saying, oh, maybe it's not going to happen anytime soon. Also, we'll open space for other, I think, cryptos as well.
Yeah, just one of the indicators is that it became clear that the Bitcoin ETF was going to get launched because of how many meetings that were being had with the SEC and the applicants, and it was just day after day after day after day, and it was being sort of well publicised that this was happening. There's never any guarantee, obviously, with regulators, but it was very well publicised. This isn't happening at the moment yet with the Ethereum ETFs, so I think we'll all get a very good indication on timing when we see that process Because I'd imagine the SEC will do exactly the same again. There'll be multiple applications. They'll try and get them all out at the same time. Because to be fair, it worked pretty well in the end.
Yeah, I agree. But it will be a lot more complicated with staking and so forth. But because governments have a little difficult time understanding crypto, they will be able to provide liquidity because there are systems available so that you can actually stake your Ethereum and actually provide a liquidity token, which you could actually sell into the market for the price of Ethereum, and that person will be able to cash out that liquidity token for the interest on the staked token, the staked Ethereum. So you selling this token that represents your staked token, and so that will be available. But regulators are going to have to understand that, and they'll have a difficult time understanding that.
Yeah, sure thing. How do you think we really need that much ETFs? Like at the moment, we have like over 10, I believe, like about 12 or so. Or with time, its amount will reduce like naturally because of commissions and so on. Or maybe total more players in this landscape. How do you think?
I think they will definitely reduce. I mean, you probably know better than I am, but I think they will find themselves 2 or 3 maybe major. I mean, we've already seen like GBTC, Grayscale is bleeding out, and BlackRock is buying basically all of it. But we will see. I don't know if they'll survive. You probably have more background.
Why are you so pessimistic on GBTC? Come on.
Well, they sold.
They have all the chances to survive.
They sold 50% of it already. They started on January 10, which was the day before the ETF launch. They had 660,000 Bitcoin. Last time I checked, which was last night, at 310. So they sold 50%, most through bankruptcies and everything. But I think they won't sell all of it, of course. And then at some point, hopefully, the bleeding pressure will stop, which means, like you said, it takes time for institutions to go in and to purchase. But I think over time we will see 2 or 3 major. I don't know what's your view, but I think 11 is probably a little bit too many.
Well, 11 is definitely way too many, particularly for the total expense ratios that they're charging. Running ETFs is about scale. It's about getting AUM, and this is why the fees went low, because it's a land grab. And you want to get that as early as possible when 11 are coming to the market and there's one converting. It's a race to get that AUM, and they're not going to. None of those funds will be profitable until they're in the tens of billions of AUM, if even it's that low, given the fees that they're charging and the costs of running this fund. So I would think that there's like 4 of them that are pulling away at the moment, and I would think that they're the ones that will stick around long term. People are not going to kill their funds that quickly, right? Most of them from large major institutions, they'll back them, and actually, in some ways, a spot Bitcoin ETF is really just a marketing ploy anyway. It's just a shop window for other products that people want to do, particularly the larger financial institutions, or the crypto-specific ones. I mean, you mentioned Matt, right? Bitwise. They don't just have a spot Bitcoin ETF. They've got other products, behind that, active products, hedge funds, etc., etc. So the ETF is just then. They know it's not going to make any money for them, but it's great marketing. It's great for their brand building.
It's the only part, no?
Well, there's a lot of ETFs out there, and they all have different, rates and stuff like that. But and I really see that there are some that are actually buying Bitcoin. But I find it interesting that that no one has access to the Bitcoins, right? That the buyers, people who actually are participating buying as they can't. There's no option for them to buy. So what's the point? Is this spot? I sometimes wonder, what's the point of this, right? If you can only get cash, right, and not the actual Bitcoin, because Bitcoin was designed as a cash system, right? A system to store your wealth. So if you go and buy an ETF, well, then you're just gambling to get more dollars, if you ask me. And yeah, sure, it will eventually go up if they do continue to buy and put it to their storage Bitcoin, and you have to watch that. You have to actually see that. And there are some ETFs that do provide evidence that they have the Bitcoins they say they have. But those are the only ETFs I would trust, right? That actually have the Bitcoins, because most of them use Coinbase as custodian, and as you know, they don't provide any kind of information on what they have and how much they have.
Jeremy, don't you think ETFs are still a good gateway for newbies and for people who want to jump from TradFi to DeFi space? Because for some people, unfortunately, we still don't have seamless interfaces. Crypto UX UI is still lagging that, so maybe ETF is a great solutions. And these people will transfer to BTC to self-storage, self-custody after that.
Yeah, I think it is a way for people to get interested, but what's going to happen is this: what happened in the early days when I got people to buy some Bitcoins. When I begged and pleaded with them, they said, well, I don't know how to hold this thing. I don't know how to buy this. Can you hold this for me, please? And I bought it for them. And immediately when it went to $50, they're like, okay, can you sell everything for me? I'm like, hold on, why don't you sell just half? And, no. I just want it. And so that's going to happen with retail, right? Retail, if they see a 100% move, they'll be like, whoa, my God, well, look at that. Ooh, I'm gone, right? So that's what retail is, right? But if you really understand what Bitcoin is, you realize, oh, this is going to be the money. Oh, so I better actually have some, not just a ETF. But that takes a little bit of time. That takes time because most people, when they're in this space, when they hear about it, they see something going up, ooh, number go up, I'll buy that. And that's it. They don't realize what it really is, and it's an asset that you actually have to hold.
Can I say, the point of ETFs is the simplicity and the ease of the access to getting the exposure, in this case Bitcoin. That's why ETFs have done so phenomenally well, whatever the asset class. Because you can buy an ETF in your regular brokerage account, you can hold it in your regular brokerage account. You don't need to set up new infrastructure that you've got to fully understand, you've got to trust. I mean, your example whereby people asked you to buy the Bitcoin for them, they asked you and trusted you because they didn't understand how to do it and they didn't want to go through that process. So instead of trusting you, they're trusting an ETF in this instance, right? And obviously there's a lot of people doing that at the moment. So, I think that's why ETFs are so important here. There is a bit of an anathema that the original reason Bitcoin was established as a peer-to-peer payment network, not within TradFi, and then you bring that into TradFi by putting it into an ETF. Look, these two things can coexist, right? But what ETFs are allowing people to do is get that access in a very easy, simple, and very much transparent way. And you talk about whether they hold the ETF. For every single dollar that's invested in our ETF, we hold Bitcoin. In fact, the ETFs, our ETF works differently. We don't do cash creates. We actually receive in the Bitcoin and issue the ETF shares, and then when there's a redemption, we'll give back Bitcoin. So it works differently in the US because the SEC didn't allow that process, which is strange because there's less risk in what we do than compared to a cash creation redemption mechanism. But ETFs are very simple, they give access. And then when you think about institutional investors, when it's not your own money, when it's somebody else's money, you've got to do a lot more due diligence in terms of setting up infrastructures. You've really got to understand, and it's all new for these institutions, right? It's a new custodian, it's a new trading platform, it's new brokers, and it's a lot of work. And if you're just dipping your toe in, you're only going to be putting 1%, 2%, whatever your assets in. Certainly to begin with, why would you set that up? Why wouldn't you just buy an ETF? It's so much easier for them.
I'm in the middle of you both. So what Davinci said, I love. So if you truly understand Bitcoin, you have to trust yourself. That's it. You can remember the seed phrase, right? And the more people or products, even Trezor itself, or you have to trust them, right? So there's definitely a trust. And the more layers you have of trust, the higher the risk is something's going to go off. But at the same time, there are certain companies that have done certain interesting things. Like, for example, Bitwise, they have a Bitcoin address you can actually verify, which is super cool. Kudos to them. The Hong Kong ETF has an in-kind reading, which means they have to give you Bitcoin. So that could be a middle ground. And also, yeah, that's nice, right? As opposed to the fiat, okay, wait, I'm going to print some stuff, I'm going to keep the asset and give you the money, right? So I think it helps, like you said. I think it's encouraging people to explore the asset, and maybe some of them are going to be converted into, I don't want to say maxis, but I mean, it says the guy with the Bitcoin hat, but you know, they might be converted into something they want to actually go and hold themselves. So I think it's positive.
How do you think from the educational side, as an educator yourself, from your perspective, who should be in charge of educating people on like difference between BTC and ETFs and so on?
Beautiful question. I think it should be a free market. Like, we should be able to go out and say our piece, and people should decide based on information they have. You know, I don't think there is one product for everybody. I think some people prefer a service, like you said. I know some people, exactly like you guys have said, say, hey, can you buy it? Can you hold it? Can you sell it? No, that's not what I do. But that's why bank were invented. People do not want responsibilities. Some. They rather point fingers. It was your duty to keep my asset. Now I want it back. So I think there will be always a product built on anything, to be honest. So for me, from my side, I like the responsibility, the self-sovereign part, where I go, hey, it's my asset, I manage it. But I know a million people, they would rather trust ETF or something else.
Yeah, I have to kind of agree with both you guys there on, because people do want someone else to be responsible for their assets and not have to deal with it themselves. So basically, there has to be something invented that's in between, right? Between the ETF and where Bitcoin is, because it's just too far for most people to go. Whilst, you know, diehards like myself and you, Maurizio, we understand the importance of holding the asset. Other people are just like, okay, well, I just don't want to deal with that. I have my other things I want to deal with, and that's more important to me. And then figuring out how to hold Bitcoin.
Yeah, exactly. Hence why exchanges exist, right? So some people rather leave money on exchange, money, Bitcoin, which is money, on the exchanges, because they don't want to have their responsibility, right? So I think there's a space, and the UX is so bad. Like, think about someone who has no idea how to purchase and store properly, not your keys, not your crypto. There is so many steps in between, right? So it's tricky.
I mean, the concept of keeping your money on an exchange is just very alien to me. I mean, that just seems strange. I mean, you do self-custody or you put it in a regulated structure, you don't leave money, Bitcoin, on the exchange, because, you know, we've seen certainly why you don't do that.
You're saying better off to wheels. So we're a bit running out of time, honestly, so this will be the last one, unfortunately, for today. How do you think, what's the potential for global expansion? And if we're being optimistic here about ETFs, how long it will take to expand the concept, the narrative to other countries, and like how long it will take to launch another ones for other assets?
Well, as Maurizio said, you know, yesterday there was approval in Hong Kong. There's going to be more and more. It is going to flow around the globe. We're having conversations in a number of different markets today. People are excited. People want to bring Bitcoin and other crypto ETFs to their marketplace. As I said before, regulators are the barrier here, and you know, regulators don't understand this. Regulators themselves have got to get educated first and foremost, and so it's going to take time, but it's absolutely 100% coming.
There's no Bitcoin company. There's no marketing strategy to inform the masses. The only marketing structure Bitcoin has is price. Price alerts the public, the masses, hey, something's going on over there. I should take a look. So only price will get people interested in Bitcoin. And most of the time, it will just be, oh, number go up, I should get some of that. But there will be a few of those people who go, oh, why does number go up? And then once they come in and say, oh, damn, that's better money. Then they start educating people around them, right? And when people create different educational courses and teach other people about Bitcoin, this is how it expands and grows. And we're going to see that growth through others teaching other people, hey, this is going to be the money of the future. That's what I did when I first heard about it, $1. Anybody who would listen to me, I'd say, you got to understand, man, this is going to be the money. You have to see this. In the future, far out in the future, it will be the money. And yeah, once that happens, it will start to expand and expand. People will see it, people will understand, and it will happen. Bitcoin will be the money.
Yeah, I'm agree with everything, but one thing, Bitcoin at the moment has marketing strategy. When Larry think it's shipping BTC on TV, it's like definitely marketing. But BlackRock side, not Bitcoin strategy, ETF, but yeah, still. And honestly, it works great.
Yeah, and super quickly, let's not forget what happens in 4 days, more or less, which is the halving, right? So we have two events. One, those institutions ready to follow into the asset, and two, the asset chopping itself in half. So it's going to be buckle up. It's going to be a good ride.
Yeah, thank you. So, thank you for listening for us. It was quite insightful. Thank you guys. It was a pleasure.